Hi guys, welcome to another lesson. We're doing accounting 1A. It's the T accounts question 3, semester test 1, 2023. Right? So the important thing here that we need to focus on when doing T accounts is writing the opening balance for all of our respective accounts, right? We write what? The opening balance. So as you can see here, we have figures given on the trial balance, and we are then told, right, that we need to do T accounts for all of the above mentioned. So the salaries, receivable, revenue, cost of sales, trade inventories, payable, and bank. Ne? So what we're gonna do is we're gonna write all of the T accounts for all of these stuff, right? For all of these accounts, which I assume you guys have done, so there's no need for me to wait for you guys to do it, right? Fine. So T accounts, guys, are basically like accounting equation is basically like journal entries. The only thing that's different is the format and the structure. What do I mean by this? Where do assets increase? On the debit side. And on the T account, the debit side is on the left-hand side. Where do they decrease? On the credit side. And on the T account, the credit side is on the right-hand side. Is everyone following? And then, if we know where our assets increase or decrease, by default, we should know where our owners' equities and liabilities increase and decrease. Why? Because it's reverse psychology. It's the opposite. Let's prove it. Assets increase on the debit side, which is the left-hand side, and decrease on the right-hand side, which is the debit side. Which is the credit side, apologies. Owner's equities is the opposite. It decreases on the left-hand side, which is the debit side, and increases on the right-hand side, which is the credit side. Likewise with liabilities, right? Right? You guys are following. Is there a hand? We see on expenses, yes. They can't hear you, that's why I'm just speaking louder. Yes.
Income increase on the credit side. Expenses and incomes fall under
Owner's equities, yes.
And owner's equity increases on the credit side and decreases on the debit side.
Owner's equities increases on the credit side and increase. Yes.
Then income falls under owner's equity, therefore increases on the
Credit side and yes. And then expenses increase on the debit side. Why? Our account or our element is owner's equity. And our owner's equity does what? It increases on the credit side and decreases on the debit side. What does income do to equity? It increases it. So hence why it's gonna be on the credit side. But owner's equity decreases way on the debit side, and hence why when expenses increase, they are on the debit side. You're cooking. Yeah. Is everyone fine? So T accounts, as I said, are basically journal entries and accounting equation. The only difference is the structure. So it's important for you to know the structure. There's no need or there's no logical reason for a person to understand journal entries and accounting equation, but then can't be able to comprehend T accounts. It doesn't work because they are one, right? They are one. You guys get it? So when we're writing our opening balances, right? We write our opening balances on the side that which they are increasing on, normally speaking, right? So for example, if we are given an opening balance on the trial balance for salaries and wages, let's have a look at this before I even give you the answer. What do you guys see? What here is being debited and what here is being credited? Here, based on the trial balance, what here is being debited and what's being credited? Say what? They're saying assets and what? And expenses are being debited. Why? Because our assets increase on the debit side, just like how our expenses increase on the debit side. So what's going to then be credited? Our liabilities and what? And income, right? Fine. So it means that when we are writing our opening balances, we're going to write them as is here, right? Because they already gave us the figures. These figures, play the role of them being our opening balances for the sake of this assignment or this test? Raise a hand.
Ask a question.
Yes, you already did, but
When we say balance brought forward, when we say carried forward.
when do you do that? Balance brought forward and balance carried forward.
My assumption.
We did this last week, if I'm not mistaken.
My assumption is
There's brought forward and carried forward. When do
carried
we?
forward is when we take it to a new month.
Are you guys agreeing?
I want to be helped.
When do we have our balance brought forward and our balance carried forward? Because one is brought forward from the statements, the other one is carried forward somewhere else. So which one is which? I know you get confused also as well, won't lie. We did this last week though. There's no. Oh, it's down. So which one is brought down? So this is what the opening balance is going to be the one brought down. And then the one for the next month is carried forward. Are you sure? Word? Ni sure?
We have the one brought forward is our opening balance.
The one on top. It's not brought down. Guys, there's no brought down. It's brought forward. Is it not BF? Is it not boyfriend, guys? In high school is BD. Lecturer said BD. Okay, for frame, which is another form of accounting, it's BF. So let's just use BD, which is brought down. Because why? If you look at it from a lecture point of view, you are basically bringing it down from this. Content, because you're doing it under, you're bringing the figures down.
So what you're saying?
The opening balances are these ones are going to be brought down. And then the ones that are at the end of the year are carried forward for the next financial period or the next financial month. Yes. When we close it, the one that's carried forward is the one for the next month. No, I'm kidding. There's the opening balance and then there's the balance, the normal. I don't think the normal balance, I think that's also carried forward and you still carry forward that one. The one for the next month.
Bring it forward after carrying it forward.
Yes.
Yeah,
What did I say? Say for what? Say for what? I know what you say. I get it's BD. It's BD. Then CF. For the next month. Is it brought forward? No.
Then why are we bringing it forward here?
Guys, what did your lecturer say? Check your lecture slides, guys.
So that's BF.
So there's brought down, there's carried forward, and then there's brought forward
No, it's brought down.
and carried forward.
It's brought down. It's like from the previous month.
So what is she saying then about brought forward for the next year?
We are saying that
It's brought down.
yeah,
Yes.
brought down, brought forward.
Yes, it's there.
Then after like we find the highest like
Yes, that balance is the one that's carried down.
yeah, then
And
carrying down.
and then for the next financial month, what do we call it?
We call it
Bring
brought
it
down.
forward. We bring it
Bring it forward.
That's what we say.
Yeah, like it's carried forward for the next month to bring it down.
Carry forward is from when you
So listen, guys. BF or BD brought down opening balance. When you have to find which side is greater, that balance is the one that's carried forward. And then the one for the next financial period or the next financial month is brought down from the one that was carried forward. You following? You'll see when we do the lecture example. Right? What else is important? Yes, please note, we have what we call temporary and permanent accounts, right? We did this last week, but I'm seeing a lot of new members. You were there. You should. Yes, we have what we call temporary and permanent accounts. So temporary accounts, right, are accounts that need to be closed off at the end of the year so that at the beginning of the next financial period it's zero. Like revenue, you can't carry revenue to the next financial month, the next financial year. You can't carry depreciation to the next financial period. Those ones need to be closed off so that when you start the year again, it's zero. And you're going to see when we are doing the actual question, right? Those are called what? Temporary accounts. These are our incomes and our expenses. Then we have our permanent accounts. Our permanent accounts are our assets and liabilities. These ones, their balances can be carried over to the next financial period. For example, you buy a car today worth 5 million, right? your year ends 31 December. You're gonna say car minus your depreciation. The carrying value of that car next year, let's say, will be 4 million. Can you see that we are carrying the amount into the next financial year? We can't say that we bought a car this year, 2025, for 5 million. At the end of the day, we must make sure that it's zero so that we start the year again on zero for vehicles. It doesn't work like that, right? Are you guys following? There's a hand.
Accumulated depreciation is a negative asset.
Accumulated depreciation basically decreases our assets, yes.
It's a contra asset.
That's what it's a contra account. It's a contra account for depreciation. Whoever said it's a negative asset, if it comes from your lecturer, I will hear it. If it's coming from a student, just listen to me. But if it's your lecturer away, it's a negative asset.
Yeah, that's what they say.
No, then it's a negative asset. I can't fight the lecturer. It's a negative asset. But just for me to make it easier, for people that didn't do accounting in high school, just see accumulated depreciation as a contra account of depreciation. It makes things way easier. The reason why they say it's a negative, the reason why they say it's a negative asset is because you are actually going to decrease it from the asset itself. And where are we decreasing it? Under non-current assets. So it's a minus what. That minus what figure is accumulated depreciation, hence why they see it as negative asset. But if you're not in tune with accounting like that, just see it as something that's decreasing the cost of your PPE. Right? Property, plant, and equipment. Not land. Are you guys fine? You fine, right? Guys, can you please give a round of applause to Yolani? Round of applause. Hi, Yolani, how are you? Guys, tie me. Some days you're gonna find us dead. I swear. You'll find us dead. Long gone. So we are now starting. You guys okay with what I just said, right? Fine. So did everyone write? You guys all did this, right? So our opening balances, we all have it, right? So what is gonna be our opening balance for salaries and wages? You guys should be. Oh no, let's change. I forgot. Let's change. Yeah. We are changing. You didn't finish. There's nothing. We do like you didn't do it. We need to make sure that we see our zeros out loud so that we know that in the test we never make the same mistake again. Even I, Senior John, did you come alone? Yes. No, I will be your saving.
What you say it's 5 minutes. How much is the
So you guys all have your own, you guys don't have your own books, right? Yeah? 3 books. So who's gonna mark that one? You just mark double. Oh, she marked it already. She was too excited. It's fine, right? So, what is gonna be the opening balance for salaries and wages? What is the opening balance for salaries and wages? Okay. Salaries and wages. Where are we gonna write the opening balance? Salaries and wages, guys. Expense. Salaries and wages. Where are we gonna write the opening balance? Guys, salaries and wages. Where are we going to write the opening balance? Debit side is going to be how much?
Saving balance.
Balance, guys, it's what? It's 574. It's on the debit side, right? Fine, then we move on to the next account, right? Please, guys, it's important for you to write all of the T accounts before reading the additional information because it's going to save you a lot of time. Ne? Sharp. Receivable F is a what? What is the account? What is the element? So where are we going to write the opening balance? Debit. What is revenue? Equity, which is income. Where are we going to write the balance? Credit side. You guys already have the figures. Just make sure you're ticking correctly. There's no figures. The work is somewhere in the scoop central there. It's there. We just don't know where. It's there, but it's in the middle. I think it's in black. Right? We have cost of sales. Cost of sales is an expense, and expenses increase on the debit side. So the balance should be where? Debit side. Trade inventories is an asset, and assets increase on the debit side. If you can't find it, evaluate, boy. And then we have payable S, which is the liabilities. Liabilities increase on the credit side. Then we have bank, and bank increases on the debit side. Did everyone have all of those balances, those that are marking? Trade inventories is an asset, and assets increase on the debit side. So everyone is fine, ne? Now let's start. Is everyone fine? Or must I repeat? Cost of sales is an expense. The balance should be on the credit side. No, on the debit side, I mean. Debit. Debit for damage. Cost of sales is an expense, guys. It's going to be on the debit side. You fine, ne? Can I move? Salaries and wages, expenses, debit balance. Receivable F, asset, debit balance. Revenue, income, credit balance. Cost of sales, expense, debit balance. Trade inventories, asset, debit balance. Payable S, liability, credit balance. Bank, asset, debit balance. Everyone is fine, eh? Now let's dance. So, I'm not gonna show you guys the T account because you guys have the T account in front of you, right? Or do you want me to still share the memo? Anintemi. Wow. Hi, ma'am. Okay, no more Zulu. We speak English now. Right? We speak English. Very much fluent. Thank you. So I'll show you guys the memo, right? On the 28th of December 2022, trade inventories amounting to 55,000 were purchased from payable S. Right? So we bought what? Trade inventories amounting to 55,000 from payable S. So what's going to happen to our trade inventory? The T account of trade inventory, we are going to go to the debit side, and the contra account is going to be payable S, 55,000 rands. Are you guys following? I'll share the screen with you guys, but are you guys following? Then for payable S, we go to the credit side, and the contra account is going to be trade inventories, credited 55,000. Why? Because for payable S, we are going to credit it because we now owe payable S even more money because we bought more inventory on credit. Are you guys visual learners?
No.
Are you guys hearing me? You are both. Let me show my thing here. But now it's going to show you even memos, but it's fine since everyone assumed did it. So, what do I mean by what I mean, or what I say? Where were we? Trade inventories. So, the balance we got. So, for trade inventories, you guys can see here, for trade inventories, it's debited, because inventories increase on the debit side, we have payable S, 55,000. What does this mean? It means we have more inventory worth 55,000, that which we bought from payable S. Is everyone following? Please write the dates, but yeah, for the sake of this, just give them a mark, as long as the amounts are correct, and payable S is the contra account. Right, but also you must write your dates, guys. Right, 55,000. So this is for trade inventory. So what's going to happen for payable S? For payable S, we are going to we are going to have trade inventories credited by 155,000. Why? Because payable S is liabilities, and liabilities increase on the credit side. When we have trade inventories for credit side, it basically means we owe payable S even more because we bought goods on credit. Is everyone following? Is there a question? Again, guys, I said we speak only English. Welcome, guys. Welcome. Welcome. Ahead. Is everyone fine? You get it? For those that don't understand English, must I say it in your mother tongue? Or you okay? Okay, there's a question. Or you get it in English? Okay. Everyone is fine? Can we move on to the next transaction? Word. Are you guys sure, guys? This is gonna come out of the test on Monday. Must we start again from trade inventories? Let's go again from trade inventories. Must I read the scenario again, or must I just explain? So for trade inventories, what is trade inventories? Slow down. Let me speak like you're learning from Maverick. So guys, what is trade inventories? It's an asset, right?
Is there a difference between like inventories and trade inventories?
Is there a difference? What's your name? Okay. What's your name? Tato. Is there a difference between Tato and Bob? No. Right? So guys, trade inventories. Trade inventories are assets, right? And they increase on the debit side. Right? So what happened here? Under trade inventories, we bought inventory on credit from who? Payable is. So we record it for trade inventories on the debit side because we want to indicate that there's been an increase in our trade inventories because we bought them on credit. From who? Payable is. We can't put trade inventories as a contra account for trade inventories because we are lying. Two accounts must always be affected. Hence why for payable is trade inventories is debited. This insinuates that we have more inventories because this is when inventories increase on the debit side. So for payable is, which is payable is, trade inventories is going to be on the credit side. Why? Because we are basically saying we are acknowledging that we bought inventory on credit. And when we buy inventory on credit, you are basically now owing payable is even more because you bought something on credit. What is the contra account? Trade inventories. Because for you to owe someone, there ought to be a reason for you owing them. What is the reason? Trade inventories. Is everyone understanding? That's transaction number 1. Any question? Are you guys okay? Maverick, your line is it fine? It's working? You like this one, eh? Slow pace, no rush. So we can move on to number 2, right? Number 2 here, so I hope you guys are marking, right? Yeah. Those people's things. Those that are new, if you didn't do this, it's fine, you are new. Tomorrow, don't come without doing your homework. You see already space is becoming an issue. People, need to leave. So do us a favor, right? I'm joking. Right? Number 2. On the 30th of January 2022, trade inventories were sold on credit to receivable A. Okay, that's the important part. The other stuff is just additional information. We sold trade inventories on credit to receivable A. So here, actually, the information is very important. I'll take it back. The trade inventory, okay, but wait, full stop. Let's break it down. Whenever we sell anything, always remember, for test 1, there are 4 accounts that are affected. I'm saying test 1 because for test 2, there will be 5. Because of VAT. We're going to have VAT output. Let's give that for VAT, especially because it's 17%. But for test 1, when you sell something, 4 accounts are going to be affected. It's going to be either bank or receivable. It's bank if you sell using cash, or if they pay you cash contant, like real money. It's going to be a receivable, like in this context, when you sell on credit. Right? So it's bank or receivable, and then revenue. Whether they're paying you today or they are paying you next week, you record transactions when they happen, not necessarily when payments are made. So we still recognize revenue, even if it's bought on credit. Are you guys following? So our revenue is gonna be credited, because we already what? Debited bank or receivable. Yes, sir. Yes, so when we say cash, what are we talking about? We are talking about EFT, cash, deposited. There is no gain in person. Ne? Accounting is always, there is no gain in person. There'll never be a transaction where they say that we sold goods and the person gave you cash on, like they gave you cash on hand, like they gave you yesanga. Like we always record transactions in accounting. There's no illegal drug dealing here. Everything needs to be recognized. So if you ever see a transaction where they gave you in a brown envelope, you are no longer doing accounting. It's pure corruption. Because in accounting we account. Yes? Good. So we debit bank or receivable, credit revenue. Then, guys, until when you sell something, it means something is decreasing. When you sell something, your trade inventories are now less. So trade inventories will be credited, because crediting trade inventories is you basically say you have less trade inventories, because trade inventories decrease on the credit side. Must I repeat? Trade inventories are assets, and assets decrease on the credit side. If I have 5 apples and I sell 2, it means I am left with 3. 3 is less than 5, meaning I have to de-recognize the 2 that which I have sold. Hence why I credit trade inventories. I now have less stock to sell. And then what do we debit? We debit cost of sales, right? Right? Cost of sales is the contra account, right? So those are the 4 accounts that are affected. Yes, sir.
So it's a test situation. Let's say for like the T account, maybe the statements.
T account. But statements, which one?
Or statements.
Financials, which statement? You have to be specific. You're an accountant.
Now, okay, what I'm asking is,
okay.
Is it an issue if like I write numbers in pencil and like I forgot to put them in like a pen?
Which numbers?
Like the numbers that are put in.
In pencil, it's a big problem. You didn't write anything if you write in pencil.
Seriously?
They won't mark it. What are we marking?
Oh, okay.
Because you used to be at home, pencil, let me just erase this 0 first. Because no, we use blue and black pens when answering questions.
No
Anything in
T-pegs.
pencil will just, and no T-pegs. Answer blue, black, no T-pegs. Pencil, just write everything in pen. You are not Oscar Pistorius. You won't find the time to rewrite everything. The time flies in that thing. Eh? Oscar, what do you mean? Because he's a fast runner. Oh, but Oscar, hey. Oh, Usain Bolt, guys, but you get the point, right? Usain Bolt. No one is Usain Bolt, guys. You will fail if you write in pencil. A remark also, exactly, right? You've been here before, ne? He knows too much. If this is your first year, like you really clocked. You're like, yeah, also that. But yes. Number 2. So what are we gonna do for number 2? We're gonna break it down into, again, there's 4 accounts. Let's break it down 2 by 2. We sold something on credit. So for our trading, our receivable is going to be debited. Receivable F is going to be debited by 85,000. The contra account is going to be what? Revenue. Maverick is not with me. So we're going to say under receivable F, we're going to write on the debit side, revenue of 85,000. We are showing that our receivable now owes us even 85,000 more. And then for revenue, we're going to go to the credit side and write receivable F, 85,000, to show that our revenue is increasing, and it's increasing because of receivable F.
Yeah.
Must I show you guys? So, where are we? We are here by revenue. Can you see for revenue it's on the credit side, receivable F, 85,000. Please mark your respective, it's not associates, acquaintances, your classmates. But no, classmates. This is not high school. Are you guys classmates? Yeah, you're old, isn't it? Well, so what do you guys call yourselves? Colleagues, but you're unemployed.
Not me.
Acquaintances. We family, guys. Ne? No? No. We family, ne? Yeah. We just don't know who our fathers and mothers are, but we are one. Can you guys see? Then we move on to the receivable part. Can I go to the receivable part? For the receivable part, it's going to be debited revenue 85,000. Do you see?
Yes.
This is question 3 for your paper, guys. Please, if you don't understand, let me know. Let me know. Let me know. After this, segulate. Right? You still have Friday? Did you say that?
Also Sunday.
Sunday, I told you guys it's for lovers. There's no time.
No, you said Sunday is confrontation.
For lovers. For lovers. Friday, guys, is a holiday. We rest, we pray. Guys, if you don't know something by Friday, just know by Monday, even if you try and learn it on Sunday, you would have forgotten. You're learning because of pressure now. You don't have to, and you're writing 8 a.m. Those that are going to cross night, I wish you the best of luck. Please drink Red Bull. You will need it.
And not sleep.
Yeah, it works. You have to cross night and then sleep after the test. Just don't attend the class on that Monday. It works. Trust us. We are here because of cross nighting, guys. It works.
Yeah, because of cross-nighting.
Cross nighting, guys. So everyone is fine. We can move on to the next transaction, right? Please. If you've never cross nighted, don't try it on the big day. You will die. You will die. If it's your first time, try Saturday. See how your body feels. Don't try it on the day. Hey. You'll see still. Hey. Fine. So we are done with the recognition of the revenue and the receivable. We come now to the cost of sales. So for cost of sales, it's an expense, and expenses increase on the debit side. So the contract account for cost of sales is going to be what? Trade inventories of how much? 68,000 rands. Right? Must I repeat, or you guys heard that? You heard that, eh? You guys are following, you guys are
The
smart.
cost of sales, debit 68,000. And then
The contract account is trade inventory, 68,000. And then for trade inventories, you're gonna credit cost of sales 68,000 because we now have less inventories left. Already people are claiming. Crazy.
but the way you approach it is smart. Knowing that it's 4 accounts that are on your face.
Exactly. There's no need for you to, guys. Have you guys ever heard the English proverb? When you want to eat an elephant, you eat it piece by piece. You don't know that one, huh? You do. Exactly. What that means in simple terms, don't bite more than what you can chew. If you see 4 accounts, try break it down to 2 or 1 so that you simplify the work for you, or for yourself rather. Right? If you try do it 4 accounts at once, your brain will bomb. It will bomb. Especially if you did Isaac Newton in high school. Right? Or history, Adolf Hitler. You will bomb. You'll feel as if you're part of the war yourself. Number 3. On the 31st of December 2022, a payment was made to payable S in respect to outstanding balance. Is there someone who would like to explain? I feel as if I'm talking too much.
On December, the payment of 87,000 was made to payable in respect of the outstanding balance. Outstanding meaning that we owe him. A payment was made. We paid somebody we owe. Therefore, it's going to affect what? 2 accounts. We paid somebody we owe. Somebody we owe is a creditor to us. And we know that creditors are what? Payables. Then, what do we use to pay? We use our bank. And it's in 2 accounts. Therefore, we pay decreasing what? We use money. We take it from our bank. We decrease our bank. Bank decreases on the credit side. Then payables. We pay our what's this? We pay our payables. We pay our payables. Payables decrease on the what? Debit side.
Oh my gosh, what? But absolutely, whatever he said, wall for ball, word for word, whatever he says goes. Whatever he says, did you guys hear it? You heard him, then? Whatever he says goes. Right? I have nothing to add. Must I just show you the solution? Or is there someone that's genuinely lost and like needs me to just explain it just to make sure? You guys get it? Wow. Guys. And guys, please, on Monday's test, the aim is not to get 100, guys, because now they're gonna know me. I don't want to be known, guys. Just get 85, 87, you know. Keep it humble, guys. There's no need to be greedy, right? Don't be greedy, guys. Don't be greedy. But to basically state on what he said, right? We're gonna use our bank, right? So we're gonna use our bank to pay. Hence why payable S here is 37. It's on the credit side because money is coming out of our bank account to pay for the payable S whom we owed, right? Then for payable S, bank is gonna be on the debit side because we are decreasing how much we owe payable S, and our liabilities decrease on the debit side. Must I yehlisa? Yehlisa or speak slower? Nyusa. What's that? English, go up. Oh, up we go. Here. Here? Down, you mean? Arrow, down. Down we go. So this is for bank. Leave the other stuff, guys. We're only dealing with the this thing, payable is. Are you guys marking? Is everyone fine with this transaction? Okay. Number 4. Gross salaries amounting to 25,000 were paid via EFT on the 31st of December.
It's gross, like the word.
For this sake, no. But going forward, it will be. Because we're going to be dealing with fringe benefits now. Where we okay, there's no need to just yeah. But later the amount, yeah, really differs. Because we have GIM, TSUF, there's a lot. Guys, we paid salaries of 25,000 EFT. What's happening? You already answered. Yeah. Oh yes, guys, and basically, for those that don't know, we play squid games in class. Ne? So if you get an answer, you move on to the next round. If you get an answer wrong, you must never ever speak again in this class today. Right? Right? Even if you're lost, exactly. Your job is not to speak, but to listen. Listen. Observe what other people are saying. I'm joking. Don't take it too hard, guys. But seriously, that's how the game goes. So if you think you have the right answer, raise your hand, and if it's wrong, you just dead for the class. It's just an hour left either way. Make sure. So gross salary is 25,000 EFT.
So since we're paying salaries by EFT, the money is gonna be deducted from our bank, so our bank is gonna be credited. Then the salaries, since salaries are expenses, so we're gonna increase we're gonna credit the expenses. And the bank is gonna be credited, and the expenses are gonna be debited.
Yes.
So if the expenses are debited, that means our equity increases.
Squid games these days.
Listen.
And you're right, but you're dead.
Yeah, I'm still cooking. I went too far. But I'm still right.
You're still right.
So
but
basically,
you're wrong, but you're right.
Yeah, but still, what's gonna happen?
So let's take it back to the beach. Start again.
So what's gonna happen is that
Restart, yes.
we're gonna credit our bank. Yeah.
Okay, for the bank T account, what are we gonna do to it?
It's gonna be credited.
With what's the contract account?
The contract account is salaries expense.
Yes. By how much?
25,000.
And then for the salaries expense T account, what are we gonna do to it?
Salaries T expense, we're gonna say
the contract account.
Didn't we already cover that?
No, I think we restarted. Let's start again. Which account do you want to start with?
Bank.
What's happening to bank?
It's gonna be credited.
By how much?
25,000.
What's the contract account?
Salaries expense.
So what's gonna happen to them now? Salaries expense.
It's gonna be debited.
By which account?
25,000.
Which account?
Which account?
Yes. The contract account.
Equity.
Squid games. He's there.
Bank.
It's there. But you get it.
Yeah.
So what he's saying, if we pay salaries and wages, Zianda, was this the girl you saying her shoe broke? Yes, hi man, how are you? So, what's gonna happen? When we pay salaries and wages, our bank T account is gonna be credited, salaries expenses 25,000, and then for salaries we're going to debit bank 25,000 because our expenses are increasing and they increase on the debit side. And then bank is going to be credited because it's decreasing because money is coming out. Is everyone okay with that? Yes.
What is this question you're asking me?
You are long day. It's fine.
What are you asking me?
The question I asked was the contract account.
For salaries?
Yes, it's going to be bank. You said equity.
But like it.
But you did.
Oh, you asked me what?
Honey, now,
What do you want to kill me?
You did. You did. Right? So everyone's fine. Must I show you guys the memo? Why do I have a feeling you guys don't trust me? Like when I say something, guys, you must be like, no, he's cooking. But it's fine. It's fine. You don't trust me. It's fine. There's some questions where I don't have memo. So what are we gonna do then? You just trust, ne? Trust, guys. Trust the process. So for bank, what is it? Salaries and wages, 25,000 credited. You see? Do you see? And then for salaries and wages, let's come here. Salaries and wages. We have 25,000 debited. Do you guys follow? Right? Are you guys marking still, right? Yeah, but you said equity. You long did. Is everyone fine? Can we move on? What number are we doing now? Oh, number 5 looks easy too. You guys were lucky. Here, guys, if you fail test 1, thoughts and prayers. Thoughts and prayers, because test 2, it's about to go down. Yeah, but no, you guys won't fail test 1 because you guys are with me now. Test 2, the ones that fail test 1, I'm gonna feast. But please, guys, make me proud, guys. I'm here sacrificing my time, guys. I could have been studying, but I wasn't. But I could have, right? But I'm here because I care for you guys. It's out of love. Don't say you paid. You paid for March. You paid for March, so this is technically free. You paid for March, so it's out of love, guys. I love you guys. So please, also in the test, once you're done writing the test, you must say, with love, my tutor is 121212. Ne? Every page, I'm joking, don't do that. Right? Number 5, an amount of what? 16,000 was paid for rental office for the month of December. This was a trick question. I want to see if someone is going to get it. What happened here? What accounts are affected? What do you need to do? It's actually not a trick question, but because I said it's a trick question, people think it is. But it is. What accounts are affected here? Bank and what? It's bank and rent expense. But when you look at the question, you only needed to do the T account for bank, right? Yes. Not for rent expense. That, however, does not suggest or insinuate that only one side is affected. Both sides are affected, we're just accounting for one. Ne? So what are you going to do to our bank? Our bank is going to be credited, rent expense, 16,000. Right? Must I show you guys? You still don't believe me? Yes.
No, I think yes, show her.
Yes, because you don't believe me. It's fine. Bank, right? 16,000, bank, rent expense. Is everyone following? Can we move on? Too fast? Everyone's fine, eh? Some people seem bored. Is this too easy, guys? Must we do real statements now? Or what? This is too easy. Yes, guys. Also, another thing. You guys are writing on Monday, right? So I don't have the time to attend your actual lectures and really hear the scope of what's going to be tested. What did they say will be tested? How many marks? How long? 70 marks, right? So question 1 is 25 marks. Question 2 is 25 marks. Question 3 is 20 marks. So you can see here, this is question 3. How many marks are here? So we can anticipate T accounts 20 marks. Conceptual framework is 25 marks, basically.
And 10 of those
is the accounting equation. Oh, too excited. Is that? But it could be a liability. It could be expense.
But you know what? For liability, expense, and income, you don't get to 10 marks.
Liability you can.
Liability you can.
And income, and expense, you can. You can, genuinely you can.
I've seen assets and liability that you can.
Income and expense. You never know. Do you know CBA? You don't know CBA. You don't know.
Yes, yeah,
You
right.
don't.
Plus when smiling in class.
Hey. Right? So, conceptual framework is important. You have been saying the scope over and over again. Conceptual framework, know your definitions, all 5 elements, know them off by heart. Know the application. Know your accrual basis of accounting, going on concern. Know your enhancing and fundamental qualitative characteristics. So no faithful representation, no relevance, no understandability, no comparability, no timeliness, and no verifiability. That's basically, and know the users of financial statements. So it's the potential shareholders, investors, creditors, lenders, banks, government stakeholders, all of that, know them. That's question 1. Know your accounting equation. Know accrual basis of accounting. Going concern, yes, know all of that. Accounting equation, know it. Know all of your financial statements. We don't know which one they might cook up. Ne? We don't know which one might cook up, but if you enter the test without knowing your statement of profit or loss, you will fail. Like, I'm not sure, ne? But if you enter the test without knowing that one, you are in for a long day. Statement of financial position. Oh, guys, it's easy to pass, easy to fail. Right? I told you, assets equals owners' equities plus liabilities. If your thing doesn't balance, you make it balance. With wrong figures, it's fine. Just make it balance. Right? Please, I'm begging you. You're not smart for showing that you got to a point where you didn't get to the final destination. No. Make sure you get to the final destination. Even if it's the wrong route, it's fine. Right? If it doesn't balance, guys, you won't get principal marks. Make sure it balances. What else? Statement of changes in equity, it's pretty much straightforward. You guys don't deal with preference shares. You guys don't deal with share issue costs. So it's just the basic statement of changes in equity. And then SFP is SFP. We're going to cover it still, but I'm just saying, you need to know this. The T account, please, it's this. Journal entries, it's going to be there, 15 to 20 marks. Your narrations, know how to narrate. Yes, sir. Yeah. Yes, sir. Who has Mr. Sparkle's book? Is it Mr. Sparkle? It's not here, Mr. Sparkle.
When we were talking about interest income.
Yes.
Yeah. I wrote down what I think, but then when I checked the meme, like I was narrating whatever I think. Then when I checked the meme, it was wrong.
What did the memo say? Oh, are you talking about your narration or the account?
My narration.
Then they're not too strict on the narration. For the narration, if they say recognize, for example, okay, so what is your narration?
The memo said, what's this? Interest income. Accrued interest income goes to the SFP. The
Statement of financial position, yes, because it's an asset.
Yeah. Then interest income goes to
PL. Yes.
But then I wrote that, what's this? Interest income goes to the PL.
And then you debited like the receivable financial what?
Yeah, then the financial thing goes to the
Statement of financial position.
Yeah.
Yeah, so when you that question with the interest, the reason why they're saying that it's accrued income because it's income that you just haven't yet received, which is still a receivable. What I did then, I just said receivable interest, receivable financial investment what, to state that we are going to receive money from the investment what. I just didn't say it's accrued. But I wasn't going to get it wrong because if we take that answer to the statement of financial position, we're still going to take it to the current asset part.
Yeah, I was just saying, like, for someone who doesn't understand, like, yet, this one is the best one, the one for financial position, taking it to the financial statement of financial position.
Okay.
It's much more understandable.
I still don't get it, but okay. I don't get it.
This one in the interest.
Leave it, it's fine. We'll see when we deal with another one. Alright, so everyone's fine, right? Journal entries you need to know. You need to know how to narrate and stuff. So we're done, right? So we're done with this. Now we're just closing off, ne? We're not done. Now we're doing number 6. So what's number 6? On the 30th of December, a shareholder deposited an additional 180,000 into the bank account. So what's going to happen to our bank account? Debited, right? Shareholder capital 180,000, and then are we supposed to do for share capital or equity? We're not, ne? So we're just looking at bank, right? So when you look at bank, it's just gonna be debited 180,000 share capital, right? Because money is coming into our bank account for what? For share capital, because it's basically capital contribution from a shareholder. A shareholder is someone that has shares in a particular company, right? They hold shares. Shareholder, right? Right? If hi?
If the share capital account is like they under listed ones, would you write bank?
Yes, we're gonna write bank under the share capital, and it's gonna be credited because our share capital is increasing, and the increase is on the credit side. Is everyone understanding? So now we're gonna do what we call the closing off process, right? Where we need to close our accounts for the next month. So this one I'm gonna have to do with the memo because it's gonna confuse the masses, right? So what do we do when we close off? When we close off, guys, minus this. When I say ignore this 955,400. Ignore it for now. Let's look from here. Leave this figure for now. So we're here because this is the information we had. We had the balance and we had the amount. We had the balance and this was opening. Wait, this was the opening balance, right?
Yes.
This was the 25,000 salaries, right? And then this was we have nothing. Fine. So what do you do? This is actually wrong because this must be closed off to 0. Yes. Yeah. This is. Wait, but when does our year end?
31 December.
In the test, sharp. So here's what's happening, guys. Which side is greater? Which side is greater between our debit and credit? It's our debit, right? No, it's our debit because this plus this gives us this, but this it wasn't there. We didn't have it, right? We didn't have it. So they just basically put it here so that it can balance, right? So what is meant by this? 574 plus this gives us 599,400. Right? 599,400 rands. Right? So this is gonna be the amount that's greater. Then they make it balance. And then they insinuate that for next year, our opening balance for this is gonna be 599,400, which is very misleading, right? Yes, but
For example, I didn't balance it on the credit side, I just put a 0 there. Would I do some after that?
Thing is, usually guys, these are what we call temporary accounts. Temporary accounts need to be closed off at the end of the year to 0. Because you can't start the next financial year owing, because all expenses and incomes are recorded within their respective periods. Ne? So what I would have done and what I did in the test, which I got the marks for, full marks.
You wanna see it?
I don't know. I'll fetch my script tomorrow. Right? What I did is that I said this plus this gives us this. And then I also said this is 599 because the thing must balance. But I didn't carry over the balance because this thing I closed it off to 0 so that on the 1st of Jan we enter with no balance at all. So that it's 0. We start again from scratch.
What do you mean in terms of balance?
Because this is a temporary account and temporary accounts ought to be closed. I'm not fighting. No, I'm not fighting. So what I'm saying is that I would have left my answer here. Here by 599,400. Here. I would have left it here and not had this. Because it's a temporary account. Yes.
That's what I was asking. Why was it 10? Because you said it's supposed to be 0.
No, look, another thing, right? This is a memo, right? Where the marks are awarded? The amount, which is 1, 2. So do you think had you wrote 0, 0 here, you're gonna not get marks? Are there even marks for that? Oh, so again, 1, 2, You're still not getting it? Not you. There's one at the back who's confused. Talk to me, come. You see, in the test, they only want this. Because even this suggested memo, I feel as if they made a mistake because this is a temporary account which needs to be closed off to 0. Because you can't enter a new year owing employee salaries and wages, guys. Otherwise, you are facing bankruptcy. You need business rescue. You're not operating for a foreseeable future if you are owing salaries and wages. Right? Salaries and wages cannot be liabilities, guys. It's not a loan. These need to be settled within the current period. Are you following? So even in the test, the memo itself states that the marks are here only. Right? But if you want to feel like you're Tyler the creator in the test and explore, you're more than welcome to do so. Explore, you know, you do things differently. You're more than welcome to do so. But the real marks are here. So what I was gonna do, add this, 599, 400, 599, 400. We are done. There is no opening balance for the next year because it's a temporary account. Are you following? Where are the marks? 1, 2.
There's no mark for the proper total.
No. Unless if there's a mark for the proper totals for all of the totals at the end. But here, for sales and for salaries and wages, here are the amounts.
And if that's the case, it's going to be 1 mark.
2 marks, 1, 2. Yeah, 1 mark if you get all of them correct. Every hour you get mark. Are you guys okay? Was I moving too fast? You see here, this is not a temporary account, this is a what? A permanent account. Permanent account, you can be carried them, yes. Incomes and expenses. And then permanent liabilities and assets. So here our balance was 230 plus our revenue of 85,000. So we had nothing on the credit side because you can't. Yeah, for you, yeah, this is friend. It's fine, let's leave it. There was nothing on the credit side. There was nothing. So which side is greater? The debit side, so it's going to be 298,000, 298,000, right? So the balance carried forward is 298,000. So in the next financial period, we enter the year knowing that our receivable owes us a balance brought down of 298,000. Just because the year ended, we don't now assume that we no longer owed. We are still owed. I want my money. Even though they didn't pay in this class, I want my money. Right? I didn't forget. I'm joking. But yes, there's a help. Must I do it practically, guys? Like type it down so that you guys see. Oh yeah, practically. Practically mean yeah. Alright. But it's here, boss. But it's fine.
Because we maybe, but then we could say understand.
So I'll do it for the next one. Right? So is everyone fine here? Sure. For the next ones, for those that like to see my handwriting, you can focus on the board. Those that have eyes can see on the board. No, I'm doing it because, guys, I don't want any excuse when people fail. I don't want no excuse. He didn't draw it for me. That won't happen. Right? For revenue. Right? Revenue. Right? Revenue is what? Revenue is credit, debit. Revenue increases with here, right?
Yeah.
Minus. Yes. You can't see it. How do we this one can't be 10, you're lying.
Chief, why don't you just use word?
But you guys can
No.
see. Yeah?
Tell him to come sit here.
Come sit here, yeah. But guys, it's here. There's nothing I'm doing that's new, guys. It's here.
You don't have to do it.
Who wants me to write? Nah, it's there.
Why did you write?
Why did I write this? So revenue, right? Our balance is 2,523,000. And then our receivable F was 85,000. We had nothing on the debit side. So which side is greater? The credit side, 2,608,000, 2,608,000. You can't have a balance. This thing is wrong. We stop here. Because this is a temporary account. Your lecturers will be surprised. Wow, temporary account. Those that want to add spice when to show that they know their work, say this cannot be carried over because it's a temporary account. ne? Just to get bonus marks, to show that you want to tutor the module next year. Ne? They need to know your name, right? But if it's too many of you, then it's gonna steal the spotlight. So only like 2 people must do it. Right? So you guys are fine with this, ne? We can move. Guys, we are scheduled to leave at 7:30. So there's still something else we're gonna do. Eh? Did I start up? We are scheduled to leave at 7:30. No, you crazy. You are crazy. Cost of sales, right? This is our opening balance, 656. Then trade inventory. Did we have anything on the credit side? No. So which side is greater? 724,000, 724,000. Again, there's no need for this. It's a temporary account. Are you following?
Yes.
Sharp. Now, please focus. No, like literally focus. Trade inventories, right? We have our opening balance, 172,500. We have payable S, 55,000. We have cost of sales, 66,000. Which side is greater? Our debit side is greater by how much? 227,000. So 227,000, 227,000. 227,000 minus 68,000 to get our balance carried forward gives us 159. Meaning that next year, right, in the new financial year, our opening balance is going to be brought down by 159,000. What does this mean? It means that at the beginning of the year, we no longer have interest of 172,000, but now it's rather 159,000. This is the stock we have. Is everyone following? Are you all following?
Yes.
Okay. Payable S. Can I squeeze both of them in? Yes, I can. Payable S, what do we have? Balance 199,000. Trade inventories, we bought on credit 55,000. Bank, we paid 37,000 payable S. Which side is greater? Credit side, right? 254,000, 254,000. 254,000 minus the 37,000 we paid our payable S is what? 237,000. So next year we owe our payable S 217,000 instead of the 199,000 or whatever. This is how much we owe them at the beginning of the next year. Is everyone following? Is everyone following? Good. Where am I going? For bank, I think this is the last tier account. This one is the one with the most information, so bear with me. Balance 85,800. Share capital of the shareholder who contributed 180,000. On the credit side, salaries and wages 25k. Payable S, we paid 37,000. Rent expense was 16,000. Bless you. And then, which side is greater? It should be the debit side, right? Debit side 265,800. 265,800. 265,800 minus 16,000 minus 37,000 minus 25,000 gives us a closed off or carried forward balance of 187,800. This amount is then going to come to the debit side as balance brought forward or brought down to be 187,800 because this is the money that we're going to have at the beginning of next year, which I should show you guys now, which is this, right? Which is this. And then they say award 1 mark for balancing all the accounts. 1 for all. So if you happen not to balance one account, you don't get this 1 mark. And trust me, every mark counts. You will see. You will see. Right? And then voila, that is how you get your 20 marks. Is everyone fine? Good. So now we move on to the 2024 question. Are you guys tired?
Yes.
You want to rest? Are you guys done for the day?
No, we're not done with it.
You guys already paid me for 2 hours, but I'm okay if you are. You guys want to continue? Like on a serious note though, you guys think you've had enough. We continue, né? We only left with like 40 minutes.
We have more questions.
Okay, let's take like a 5-minute break. Those that want to go to the loo, go. And yeah, 5-minute break. We'll be back at 18:55. And this was part 1 of the lesson online. Thank you so much for joining.